Imagine waking up one day and realizing the silver you thought was real is nothing but a digital promise, a paper contract that can be printed, traded, and canceled with a single click. Now imagine that the world's biggest financial players have been doing this for years, quietly controlling the price, hiding shortages, and stacking physical silver behind the scenes while the public keeps buying paper. If you think that sounds extreme, stay with me, because what I am about to explain is not a conspiracy theory. It is a system that has been quietly collapsing, and the consequences are about to hit the market hard. In the next 11 minutes, you're going to see how the silver market has been manipulated, why paper silver is dying, and what this means for anyone who wants to protect their wealth. Before we dive in, if you're watching this for the first time, hit that like button and subscribe to Silver Reset, because the truth about silver is not being talked about anywhere else like this, and you don't want to miss what comes next. Let's start with the basics. Silver is not just a shiny metal for jewelry or coins. It's a critical industrial metal used in electronics, solar panels, medical devices, and even defense systems. But it's also one of the most manipulated markets in the world. Why? Because silver is scarce compared to gold, and its supply is limited. This makes it a perfect target for manipulation. The big banks and hedge funds don't just trade silver. They control how much of it is available, and they do it using paper contracts called futures. These contracts allow them to buy and sell silver without ever taking physical delivery. That's what paper silver is, a promise to deliver silver that often never actually exists. Now here's the key problem. When a bank sells paper silver contracts, they are betting that the price will stay low or fall. They don't want physical silver because it costs money to store and secure. So instead, they use paper contracts to create the illusion of supply. This drives the price down because it looks like there is more silver available than there really is. But the moment the market starts demanding physical silver, when real investors want real metal, the system begins to crack. And that is exactly what is happening right now. People are waking up to the reality that the paper market is not backed by real metal. They are realizing that if everyone tried to take delivery, there would not be enough silver to go around. Here's where the manipulation gets really dangerous. The big players don't just sell paper contracts. They also create artificial price movements to keep investors scared. They use short selling, naked shorting, and aggressive margin rules to force the price down during times when it should be rising. If you watch the silver price closely, you'll notice a pattern. The price will spike, then suddenly collapse without any real news or reason. That's not a normal market. That's manipulation. It's designed to keep silver cheap and prevent a real price discovery. The goal is simple: keep the public from realizing the true value of physical silver. But why would they want to keep silver cheap? Because silver is one of the most powerful hedges against inflation and currency collapse. When people lose trust in paper money, they buy silver. When they fear banking collapse, they buy silver. And when they worry about geopolitical instability, they buy silver. Silver is a form of insurance. That's why the banks want to control it. They don't want the public to buy silver because that would reduce confidence in the financial system. It would expose the weaknesses of paper currencies and paper contracts. And the more people buy silver, the more the system's weaknesses become visible. Now let's talk about the most important part: why paper silver is dying. The system relies on a few key assumptions. First, that the banks can always create more paper contracts. Second, that the public will never demand physical delivery in large numbers. Third, that the government and regulators will allow the manipulation to continue. But all three assumptions are now failing. The first assumption is breaking because the market is reaching its limit. The number of outstanding contracts has grown to a point where it is impossible to back them with real silver. The second assumption is breaking because people are waking up. The third assumption is breaking because regulators are starting to face pressure, and the public is watching more closely than ever. Let's make this real with a simple example. Imagine a warehouse that claims to hold 100 silver bars. Now imagine that the bank issues 1,000 paper contracts based on those 100 bars. That means 1,000 investors believe they have a claim on physical silver, but there are only 100 bars. This is not a stable system. It works only as long as most investors remain passive. But if just a small percentage of investors demand delivery, the system collapses. And that is exactly what the market is experiencing now: rising demand for physical silver, combined with shrinking available supply. The result is a massive squeeze. You might be thinking, if this is true, Why hasn't the price already exploded? The answer is that the big players have been able to control price movement through coordinated actions. They can sell massive amounts of paper silver at critical moments, forcing the price down. They can also manipulate the futures market by controlling delivery schedules, warehouse inventories, and margin requirements. These actions keep the price artificially low, even when physical demand is rising. But this control is not unlimited. The system can only be stretched so far. And once it breaks, the price could move much faster than anyone expects. Now, let us discuss the most important sign that paper silver is ending: the delivery failures and the disappearance of physical silver from the market. When the paper market is healthy, physical silver is available for delivery. But when the system is stressed, deliveries become delayed, contracts are rolled over, and the physical metal disappears from the warehouses. Investors who try to take delivery often face long waits, or they are forced to accept cash settlements instead of real silver. This is not a normal market. This is a market in crisis. It is a market where the paper contracts are no longer backed by real metal. So what happens when the paper market collapses? The answer is simple. The price of physical silver will skyrocket. When the public realizes that physical silver is scarce, they will rush to buy it. But there won't be enough supply. The result will be a price explosion that will happen fast, and it will shock the financial system. Banks will be forced to deliver physical silver, and they will not be able to. The paper contracts will become worthless. The entire system will be exposed as a giant fraud, and the people who held physical silver will be the ones who survive the collapse. Now, I want to be clear about one thing. This is not a prediction based on emotion. It is based on market mechanics. When a market is heavily leveraged and when the underlying asset is scarce, the only thing keeping the system alive is confidence. Once confidence breaks, the system collapses, and the silver market is built on a fragile foundation of confidence. That's why it's so important to understand what is happening right now. The collapse is not a matter of if, it's a matter of when. But there is still time to act. If you understand the difference between paper silver and physical silver, you can position yourself to protect your wealth. Physical silver is the real asset. Paper silver is a promise. When promises break, only real assets remain. That is the lesson that many investors are learning too late. The public is finally realizing that the paper market has been a giant illusion, and once the illusion disappears, the truth will be undeniable. Now, here's what I want you to do next. If you are watching this and you've been on the fence about buying silver, do your own research. Don't rely on mainstream financial news. Look at the supply and demand. Look at the delivery reports. Look at the physical availability. The truth is there if you know where to look. And if you're already holding physical silver, stay calm and stay informed. The next phase of this market will reward those who understand what is happening. Before we end, I want to remind you that this channel, Silver Reset, is dedicated to exposing the truth about silver. We're not here to hype or fearmonger. We're here to show the market mechanics that no one else is talking about. If you found this video valuable, hit that like button again, subscribe if you haven't already, and turn on notifications so you don't miss the next update. And if you want to help others wake up, share this video with a friend who needs to hear the truth. In the comments below, tell me what you think is the biggest sign that paper silver is ending. Are you seeing physical shortages in your area? Have you experienced delivery delays? Do you think the price will explode soon? Or do you believe the system will hold longer than expected? I want to hear your thoughts, because the most important part of this conversation is the community that is waking up together. And if you agree with this video, share it with someone who still thinks silver is just a commodity. Because once people understand what's really happening, they will never look at silver the same way again.